All right, we got natural gas spiking to a new trend high, but possibly an exhaustion spike. Before we go further, a quick word from our sponsor. This video is brought to you by FXEmpire, the world's largest retail broker, offering ultra-fast execution with no overnight fees. Find a link in the description below. This is Bruce for FXEmpire, taking a look at the daily chart for natural gas. So we broke out of this ascending triangle back here last week and have been rising since then with a series of higher daily lows and higher daily highs all the way down to here, you see. And then today it spiked through this top channel line, which is a 200% extension of this lower black bounded channel line. Hit the initial target that I've been talking about, the 61.8% retracement at 528, went right through it, approached the 554 target with the day's high of 550 was the day's high, and the 127.2% extended target was at 552, and that's an extension of this full decline here. So that's 127.2% extension of this decline. And it was almost hit, missed by 2 cents, and then you can see price backed off and is on track to close about the halfway point of the day's range, but it's further away from the red 10-period moving average now. It's broken above and is on track to close above on a weekly basis the prior trend high, therefore confirming the trend continuation on a weekly basis. Let me just go to the weekly chart real quick. You can see that here. And so this is all very bullish, but in the short term, I think it's getting quite extended. We could see it a little bit in the RSI, but mostly in price action. The question is, can it keep going without some type of a pullback or consolidation? The expectation would be once it does pull back, find support, sets up for a continuation, that is the most likely scenario given the breakout to new trend highs. But you can see the angle of ascent here is quite sharp. Nevertheless, we have dynamic support here at the 10-period moving average at 481, followed by the 20 moving average at 464. Those are the first two key levels, and then if we go back to the weekly, this week's low, of course, is an important level to watch at 476 as well, because at that point we will no longer have higher weekly lows. I should say we no longer have a series of higher weekly lows at that point, and that shows a change in character of momentum within the bull trend. If I look back a little bit, the only thing that looks relative is this sharp advance has some similarity to this sharp advance back here, which was the second rally, a continuation of the first advance, first upswing from the trend high here in 2024. All right, that is it for natural gas traders. Have a great weekend.